All right, it's 27th of November. Belated happy Thanksgiving to those of you out there who celebrate the occasion. And it is also Black Friday today, but the market is not giving us a Black Friday discount, unfortunately. So we can see the SPY SPY itself, it is currently testing the all-time high again at 364.18, right? And currently, as of today, it is making a slightly bearish candle so far. Well, so we can see this is a slight resistance over here, and if prices decided to break out, we might see another leg up higher. So perhaps to maybe the 370 level. Well, that's hard to say, but there's a possibility. And if prices decided to come back down and make another correction again, likely prices will be at 354, the 20 EMA, and maybe around the 40 EMA at 345 to 346 or 348, around there, right? And perhaps by that time when prices decided to come back down, the 50 EMA might start to catch up. And the point whereby this temporary downtrending resistance line meet the 50 EMA, it might act as another strong support for prices to bounce off for another leg higher, right? So that would be something to watch out for in the short term as the market develops. All right, so once again, as the market moves up higher, our cyclical and industrials and financial sector, they have followed suit as well. If we look at the bank stocks, for example, one that I'm watching closely would be the Bank of America. The stock has moved up another leg higher after breaking out of this temporary resistance over here. Right, so while that means good news for all the cash secured puts that have been selling week after week consecutively, we do have one covered call in the account that is very badly damaged. And that would be this one over here, right? Expiring on the 18th of December. I've previously sold it at a strike of 25. You can see this call is very, very deep into the money. I've already rolled it out once and did not manage to roll it further up in terms of the strike price. So the current trade price after rolling out was at $2.37. And right now you can see that the value of the options have already risen up so much more to almost $4. So this would be very difficult to manage unless prices for Bank of America starts to retrace back and fall back down. All right, so nonetheless, we are going to walk through today's options and see the actions that we will be taking today. Today, we will have Apple, our calendar spread. Last week, I've sold a 119 strike call at a trade price of $1.19. So I've collected a premium for $1.19 for selling this trade. And right now, it is going to expire worthless rather smoothly. Right, Apple is only going for $116. So slightly lower than our strike price. So that will also mean that we will not get to sell as high of a strike price for the next week on going forward. If we go over to the price chart of Apple, so intra-week, the stock prices for Apple fell down quite a bit actually, all the way back down to like 113, close over there, and then intraday on the 24th, it even went down to test the 100 SMA at a price of like about 112. But thank goodness and luckily it went back up. So this inch up higher will allow us to sell the next call for next week at a higher strike and also allow us to capture more premium along with it. So let's look at our options. I'll be letting these options expire worthless without any action needed. Next, I'll be looking to sell the 4th December call again to cover the long-term leap option that I'm holding. So for this time, $117 is quite close to the current price of 116.4. It's only 60 cents away. And it's too narrow given next week's price action, prices might hit 117 rather easily. So I'd like to give a little bit more room and perhaps go for the 118 strike instead. Currently it's going for $1.10 to $1.12. Well, I know that previously I've said minimally I want the premium collected to cover at least one share's worth at the strike price, right? Or maybe one share's worth at the current trading price. Given this situation, it is not possible. And it is also because the implied volatility for next week's expiration is rather low, only at 28.4%. And if we go over to the current IV percentile, you can see that it's also rather low as well. So current IV percentile is at 19%. So such a low IV environment normally is not very favorable for selling options because the premium all get very low or get crushed down to a very low value. And that is also partially because we have a rather low VIX and only like 21.25, right? Relatively low if you consider the past few weeks, looking at the election week, the start of November and so on, where we have VIX soaring up and shooting up all the way to like 30 or 40. Alright, so having said those, I will still go ahead and sell the 118, sacrifice a little bit on the premium side, and let's hope that prices do not touch 118 by next week and we can get to collect entire premium for free. Alright, very easily it was filled. And then next we have two Bank of America puts. So one at 23, one at 24.5. I still recall months back when selling these puts, I'm struggling to get them expire worthless easily because prices for the financial stocks just keep bouncing back and forth, staying in a very tight consolidation just a few weeks back. But right now that prices have shot up all the way to like $728, the puts are going to expire worthless very easily. So once again, I'm going to let these expire. And if you recall from last week's video, I said I'll be selling a Bank of America's cash secured put 1 month out from then. But that order did not get filled, so I wasn't in the trade. For this week, Bank of America shot up even higher, so it is even more unfavorable to sell a put option right now. Given such an exponential move, prices can come back down easily and you'll touch your strike price, and then you'll have to get assigned the shares. But once again, I'm not being worried of having assigned the shares because coming from the perspective of my own portfolio, I do have 100 shares that is about to call away from my 25 short call if I were to let it expire and then let it get exercised by the call buyer. Right, so I want to ideally own back another 100 shares. So what I'm going to do is to sell another cash secured put for Bank of America. Likewise, the usual exercise, we will be looking at a month out. So looking at the 28 strike, or rather the 28.5 strike, expiring on the 24th of December, Christmas Eve. Right, so let's hope the Christmas period will do our portfolio some good and perhaps the 28 strike will expire worthless as well. Right, if you look at the premiums being offered, let's assume midpoint at 60 cents divided by 28, which is a strike price, we're only getting 2.21%, right? So barely meeting our 2% premium per month criteria. Nonetheless, I'm still going to go for it 28 strike at $61 or 61 cents per contract, and hopefully we can get filled. If not, I'll lower the price further later on. All right, it does get filled, so we are in the trade. Right, and if prices were to stay at such a high level continuously throughout the entire of December, the previous cash secure put Bank of America that we have sold at 26 strike expiring on the 18th of December, this is going to expire worthless without a problem. So right now it's only going for like 14 cents and we have sold it at a price of 60 cents, collecting $60 for this trade. So all the puts that I've sold are having a fun time cruising through, expiring worthless without much problem. It's the calls that are being threatened right now. And along with the Bank of America calls that I've just mentioned, the next few calls that is in a rather dangerous position will be the EM and the FXI calls. So these are respectively sold at 45.5, 46, and 44. Right, so EM, like the rest of the market, has already shot up way up higher. It is currently going to be at $50 soon, and my options are all very deep in the money. So you can see that against my trade price, the what it is worth now is almost doubled. Right, and for FXI, it is slightly better than EEM, but still not safe as well. Currently, FXI is going for 48.5, and my strike price for this covered call is 44. So once again, it is very in the money, and it is also going for more than double of what I have sold. So if you're interested in how I manage my way through these difficult positions, do stay tuned for more updates on the options portfolio management video series. Make sure to leave a like and subscribe, and also turn on the bell notification so that you will receive updates on when a new video gets uploaded. Right, and we have come to our dividend capture strategy on J&J. Last week, I've sold a 146 strike call against my position that is over here, J&J. So 100 shares, I was assigned it at a strike price of 147 if you recall, because I sold a cash secure put at 147 and prices at the end of the week went to about 146.4 or 146.3 if I don't recall wrongly. And previously I've said that I want to avoid getting assigned, but because of liquidity issues, I did not manage to get out of the cash secured put that I've sold with a favorable fill. I have no choice but to let it get assigned to me instead. And initially I was still worried about the assignment fee, but it looks like there is no assignment fee for getting assigned the cash secured put, right? So you can see this is a transaction details. I've bought 100 shares of J&J upon option assignment, and this is very clearly the cash secured put that I've sold. There is no miscellaneous fee, there's no commissions, and the amount that I've paid is only $14,700. So straight to the mark of the strike price, not a single cent more or less. Alright, so let's calculate our position for this trade. I have entered at 147. This was assigned to me. I've previously collected about 40 cents worth for selling the cash secured put. And then I've collected another $1.10, which you can see over here, right? $1.10 is going to expire without a problem. J&J is only going for 143.67 right now. So I'm going to leave it to expire worthless. And there is another $1.10 in the pocket. So that essentially put our discounted trade price for J&J to be at 145.5. Going over to the chart quickly, 145.5 will be somewhere around here, this point over here. And just being unlucky again, once I have acquired the shares, collected the dividends, prices just drop straight down, just like my situation in AppV. But at least this time I've sold a much in the money put as compared to AppV. So from that, I have collected much more premium and that puts me in a slightly better position, though still not great. Right, so prices is currently testing the previous support that have been tested quite a few times. So if you are a trader watching this, you may consider a bull put spread for J&J, right? Depending on whether the options premium are going at attractive prices. So if you look at the options for J&J, next week's expiration at 4th of December, 145.5 is our discounted trade price. So that allows me to sell a covered call at a strike of 145, right? Collecting maybe 80 cents or 81 cents, right? And if we were to calculate this, minus another 80 cents to it, that will put our effective discounted price for the 100 shares to be at 144.7, right? So even if prices for J&J skyrockets next week after having sold this call, I'll still be safe because my shares will be caught away from me at a strike price of 145. But my effective trade price is 144.7. So I'll still merely break even with a tiny bit of profit, not including the dividends that I've earned. Alright, so I'm going to do this and just sell it. I'd like to get out of the shares as soon as possible and perhaps at midpoint of 84 cents. Alright, so unfortunately this might mean that the cash that is locked in J&J might not be released fast enough for my account to have the cash back and subsequently acquire the shares of Bank of America required to collect the dividends on the 3rd of December, which is next week, and we'll see how it goes. If the situation allows, I'll still go for it. I foresee that most likely we'll have to forego the Bank of America dividends. And it is rather regrettable because if you were to ask me to choose between Bank of America and J&J, personally, I prefer to have Bank of America dividends rather than J&J dividend. Just a personal preference. So, yep, something about that. And also something for you to bear in mind and be aware of if you were to execute this strategy yourself. Next week, we will have Apple, Bank of America, J&J, the usual three. And then we will have the EM and FXI covered calls that I've mentioned previously. So hopefully by next week, prices can retrace a little for me to get out of the position or for me to roll my position further out. If you look at the price action, I would say that it is rather extended, right? So prices have been going up non-stop. And if you recall, SPY has tested the all-time high, but for EM, it just shot through the all-time high like nothing has happened. If we go over to oscillators, two of them are being overbought right now, right? So RSI is overbought, stochastic is overbought. Bollinger Band, it has shot through once, but right now it is maintaining under the upper Bollinger Band. So 2 out of 3, if 3 out of 3 has been fulfilled, then perhaps we could say that there should be a rather high chance that a correction is about to come. Nonetheless, a resistance seemed to be in sight at the price of $50.45. So, well, that was drawn based on the previous peak back in like 2018. And perhaps on hindsight, I would like to just revise it a little and make it like this, right? If I zoom in a little, right? So maybe something like this, right? Broke through, come back down, support, and then broke through and resist again. So this could be a significant level to watch for EM. And likewise for FXI, similar position, right? So resistance at maybe 48.8, strong and reliable, having been supported once, resisted another time here, and right now prices are coming back again. Alright, so I hope you have enjoyed today's episode. If so, do remember to leave a like and subscribe. and also turn on the bell notification so that you'll receive updates on when the new video gets uploaded. Thank you so much for watching. I wish you all the best for your trading and investment. I'll see you in the next video.